business. I paid cash, I received product and gone. But if I say that I purchased pen, but I will pay you later, it means I have some economic value for the business. So I am the asset of the business until my claim is fulfilled. So business has a right to collect from me because I'm a customer. So that's why we record it here under account receivable. So all the customers will be treated as all the credit customers, not the cash customers. Credit customer. Let me write it down here. Credit customer. We have other name. We call this on account. On account, which means on credit. Right? So guys, are you understanding this one or there is any ambiguity? Noon, Venisha, Pike, Nana, Marco, Mirko, Subhan,
Yeah.
David, PD.
Yes. Yes.
Yeah. Yes.
Yeah.
Forward. So we saw one transaction of notes payable in our accounting, assignment as well. So what are the notes payable? These are, sorry, notes receivable. These are same like customers, but one difference is that customers signed a note, like sign an oath that I will pay you. That's it. Plus, for our previous example, I bought on account 600 yuan for this pen and I would pay you later. I pay you for after 30 days. You means I pay the business after 30 days without any interest. This is normal business practice. But if a customer wants, I will, customer say, I will pay you after 90 days. And the business can say that, look, if you pay me now, I will deposit with the bank and I can earn 2 or 3% interest on that one. So I'm not going to give you 90 days credit. You need to clear your payments in 30 days. Otherwise, I have an obligation, a legal claim against you. So I'm going to be going to the court. So then customer signed a document on his business letter or on his, legal paper. Okay, I need to pay. For example, this customer XYZ, I will pay you this amount with this interest at this date, right? And customer signature. So this business has this note, and when 90 days are over, customer will come and pay back you all the money with the interest as well, right? And just company has a signature here. Okay, received. That's it. Same like checks, but this is a personal guarantees like that. The business has on their letterheads. If you have a small business, if you have a good relationship with your suppliers or your businesses or your companies, so you just offer on your letterpad, business letterpad, you write it down. So we call this notes payable. So the difference between account receivable and note receivable is that account receivable does not have any interest, but note receivable we receive interest income. Receive income. Okay. Now the other accounts, inventory. Inventory means all those unsold or unfinished products. So if you are merchandiser, then all the goods that company sells to customers will record here, company stocks or company inventory. Or if you are a manufacturer, so inventory means all the raw material, all the semi-finished goods or work in progress goods. And all those finished goods that which company is not able to sell. If you are a merchandiser, you have a store, you just you sell and buy the finished product. So just all those items that you are not that it's in your stock, you couldn't sell in the financial year, in a financial period, we call this inventory. What is prepaid expense? So pay very close attention here. Prepaid. So expense happen now? No. In advance, before the expense happened, you paid, for example, prepaid rent, prepaid insurance. So you at the start of the year, you pay the insurance for the whole year. Something happened, I will receive money from my insurance company or rent. So there are 12 months in a year and you paid all the year rent in advance. So you are right now here. So you pay rent, for example, 12,000 a year. So it means 12,000 is not your expense immediately. No. So if you pass 1 month, how much rent is expired? 1,000. That becomes your expense, but the rest 11,000 is still usable. It still has the economic value and it will provide future benefits. So that perfectly satisfy the definition of asset. So we call this prepaid expense. So all those prepaid insurances, prepaid rent, prepaid salaries, these are called prepaid expenses, and these are written under assets, under the account of, under the head of prepaid expenses. Right, guys? TD?
Yes.
Sufyan? Miria? Joao Paulo? Momo, understand?
Yeah.
Yes, sir, understand.
Good. Now, land. So what is land? Wait a second. I just received message. Okay. Do we have Tara here? Tara, Meena? Okay. Okay, they are newcomers and they were asking that send me the link, but I think they couldn't join today. Okay. So what are the land? Land means it is because land value is huge in millions of dollars. So we have a separate account for that one and we write it down under assets. So what are the values written under land? Cost of land used in operations, all the costs. So when we talk about accounting for lands and fixed assets, we will talk about over there. What do we mean by this cost of land? So right now, remember that one, when we want to purchase land, first of all, we pay legal fees. That is also written under cost of the land. We also pay agent fees. That is also under the cost of land. So there are a couple of other expenses we do add it here, right? Because we talked about that. What are the fixed assets or long-term assets or current assets? Whose life is more than 1 year is your long-term assets. Whose life is less than 1 year, they are your current assets. If you recall our previous discussion. Okay. Then building, equipment, furniture, and fixtures. Similarly, the cost of building used in operation. Then equipment, fixture, furniture. So what are the furnitures? Like table, chairs. What are the fixtures? Like water cooler, air purifier, air conditioners. What are the equipments? Like you have the Xerox machine, computers. These are called equipments. Include heating and air conditioner, computers, and office furniture. So remember, it has depreciation on it. So as soon as you are using those equipment, furniture, fixture, their values started to decrease. So I'm using this pen, I bought it for 600. If I want to sell it, so can the owner or can the seller will be buying it at 600? He will say no, because you used it for a month, I will be buying at 560. So value 40, where it goes? Because I use this pen for 30 days. So because this is the wear and tear, or because of the usage of the assets, I use it for 30 days. So this is the usage in monetary terms. So these are called non-cash items. I didn't pay from my pocket $40. It is just I use it for a month and then sell it. So the difference is this 40 is because I use it. So that is called depreciation. Similarly, if you are using the laptops and you want to replace it and you bought it for 6,000 yuan, so company or the person will not buy it at 6,000, and he will say that, look, if I want to buy it, I would buy it new from the market. Since you use it for 2 years, I'm going to buy it at 4,000. So loss in the value 2,000 is the depreciation. So if you don't understand right now, don't worry about that. We have a whole chapter to discuss this depreciation. Just give you the idea here. And now the liability side. What are the accounts of liability? So liability is a debt, which means outsider claim. So it includes accounts payable. Accounts payable are your suppliers, which means promise to pay debt, promise to pay money to supply, and their life is less than 1 year. Notes payable can be long term, can be short term. Similarly, notes receivable, in which we ask from our suppliers more time, and we say them, okay, if we are using your money for a longer period of time, because okay, we purchased goods